Hope everyone else is doing well. As always, I'm joined by AgriLogic with Kim, Tom, and Brandon. And this webinar, we're going over the Farm Service Agency, or FSA, and NRCS, which is Natural Resources Conservation Service. Just going over the various programs available to you through these two parts of the USDA. Tom will be speaking for us today. As always, this is being recorded and we upload to our YouTube channel within a week or so. If you have any questions, put them in the chat or Q&A, and we'll answer them as we go and have some time at the end, hopefully, to answer a few as well. But yeah, if that's all I got, Tom, we'll go ahead and hand it to you.
Okay. Thanks, Diego. Welcome, everyone. As Diego alluded to, we're going to talk about programs available through the Farm Service Agency. I'll refer to them as FSA, and the Natural Resources Conservation Service, NRCS. My name is Tom Blinn. I'm with AgriLogic Consulting. I apologize for that. AgriLogic Consulting is a risk management and economic consulting firm. We've been working in the crop insurance and risk management industry for about 25 years now. We partnered with Farmer Veteran Coalition this year to provide a webinar series on various risk management topics. That project is being sponsored by a grant through the USDA Risk Management Agency. So we appreciate their support in providing this information to you guys. Our objectives today are to introduce the FSA and NRCS agencies, provide a brief overview of their local service centers, the offices available to obtain resources relative to these programs. But really what we're wanting to do is raise awareness of the various programs available through FSA and NRCS. There are a lot of programs and there are details associated with all those programs. So this is really going to be at a fairly high level. So I would encourage you to, if any of these programs sound interesting or look like they might fit a need for your operation, I would encourage you to visit the associated websites at FSA or NRCS, or visit a local service center. So let's talk a little bit about the two agencies and their specific purpose. The Farm Service Agency really implements agricultural policy as established by Congress and the President. There are various programs associated with credit and loans, conservation, disaster recovery, and farm marketing programs. But it's really programs that are defined through farm policy. The Natural Resources Conservation Service, or the NRCS, serves as leadership in partnering with producers to try to help conserve, maintain, and improve our natural resources, particularly with respect to agricultural production. So that's kind of their purposes. You can access many of the services available, many of the programs available, and do much of your application and reporting requirements through local USDA service centers. These are offices throughout the country where you can connect with FSA and NRCS employees to get more information and fulfill your reporting requirements. FSA provides a service locator tool on their website. I provided a link and a QR code for that tool here in the presentation. It's a very simple tool. You'll be presented with a map of the United States. You select your state of operation, and it will expand out into a county map, and then select your county. and relevant information, contact information, and address information for that particular service center will be provided to you. If you have an operation, if your land spans a county line, or if you actually have land in two different counties, you don't have to necessarily go to both counties offices. You can select the one office that is most convenient to you in that situation where you may have multiple counties. So let's talk about FSA and farm policy. As I mentioned, the FSA is really responsible for implementing agricultural policy established by Congress. So the programs available through FSA are defined and funded as part of Farm Bill legislation. The last Farm Bill was written or passed in 2018, and those bills are typically defined as a five-year term. So if you do the math on that, the current Farm Bill technically expired in September of 2023. However, in absence of a new Farm Bill, Congress did extend the current bill until September of this year. So we're still operating under the current Farm Bill. There is a new Farm Bill currently under consideration. There are drafts from both the Senate and the House that is currently being negotiated. It's debatable as to whether that new Farm Bill will be approved this year. In absence of that new Farm Bill, it's very likely that the current Farm Bill will be extended further until a new Farm Bill is approved. Looking at the preliminary text of the new Farm Bill, there are likely revisions and updates to the programs we'll be talking about today, but presently there is no indication of any of the programs being eliminated in the new Farm Bill. So it's relatively safe to think that these programs will all continue under the new Farm Bill. So when we're talking about these programs, they fall into sort of a handful of categories that we'll use to sort of organize the presentation today. The first group of programs we'll talk about are funding programs. These are programs that will give producers access to capital to help improve or expand or fund your current operation. There's also a category of programs around managing risk. These are programs that producers can employ to try to help mitigate risk to your operation, sort of in a proactive fashion. In the event those programs don't work, or there is a sort of an extreme disaster situation, there are additional programs associated with recovering from natural disasters, and we'll go over several of those. There are conservation programs that can help producers implement conservation activities within their operation. And finally, there are some price support programs that may be of assistance to producers to help protect against low prices, particularly during harvest periods. So we'll start going through these programs, and we'll start with the funding opportunities available through FSA. First, let me talk about sort of the objective of the funding programs with FSA. These loan programs are really designed for producers who presently are unable to get credit elsewhere through commercial or private lending institutions. Unlike commercial lenders, this is not meant as a long-term funding opportunity. It's really meant to help a producer establish production history or establish credit history that would make the producer eligible for commercial credit in the future. So once that history has been sort of established through the FSA funding, the objective is for the producer to ultimately work with commercial lenders moving forward. There are different types of loan programs available. There is a guaranteed loan program. In this instance, this is really sort of a partnership between a commercial lender and FSA, whereby the FSA is actually providing guarantees on the loan that is actually made and serviced by the commercial lenders. In these instances, FSA will guarantee up to 95% of the value of the loan. Alternatively, FSA does have some direct loans, and these are actual loans made directly by FSA using federal funds. In these instances, there would be a higher level of participation or oversight by FSA into the decisions and operational management of your operation should you receive a direct loan. Another program available is a land contract guarantee program. This is really designed to help beginning or socially disadvantaged producers acquire a farm or land by providing guarantees to the seller of that land to just provide additional assurances to the seller that the sale would go through. Now, for small producers or niche type operations, there are streamlined versions of these programs. They're both the direct and guaranteed loan programs. There are streamlined programs like the microloans and the easy guarantee loans that just simplify the application and paperwork processes associated with those. So for smaller operations, you may be able to take advantage of these streamlined programs. Now, what types of loans are available under these programs? I alluded to some of the land purchase opportunity, but there is farm ownership loans whereby you can achieve get approval for up to 100% financing to help expand or purchase a farm. To improve facilities on your current operation or otherwise expand your agricultural productivity. So there are loans to help you sort of capitalize your operation. Of course, year over year, there are operating loans available. This is just to provide that gap funding for purchasing your inputs at the beginning of the season or throughout the growing season before you're actually generating revenue off of your commodity or livestock. So operating loans are available through FSA. There are also emergency loans. So in the event of a natural disaster, a flood, tornado, hurricane, if you're operating in a coastal region, there are financing that you can apply for and receive through FSA that will help restore your property, pay living expenses in the event that your homestead is damaged due to the disaster, or help refinance certain debts. So emergency loans can help deal with a disaster of that nature. If you're looking to adopt conservation practices in your operation, whether that be transitioning to organic operations or taking measures to improve water quality around your farm, there are loans that you can acquire through FSA that will help fund those types of activities to help you implement those conservation practices. So that is another type of loan available to you through FSA. So as we described, there are several different types of loans and different loan programs, each with their own requirements and eligibility needs, as well as information requirements. One of the things FSA has done has developed and provided a loan assistance tool that is available on the FSA website. I've referenced the link here. You can go to this tool. They developed a sort of a question answer tool that can help you walk through eligibility requirements for the various loan types. And if you do find a loan or would like to pursue a loan, there is even the option to go ahead and start the application process with this tool. So if any of these loans sound like an opportunity you'd like to pursue, I would encourage using this loan assistance tool to get started. So I will stop there and just see if there are any initial questions at the moment that we'd like to try to address.
We've had some questions pop up. A lot of them we've been able to answer through the chat box. One that just came in is from Amanda. Says, for conservation efforts, what is the minimum amount of land that loans would be available?
I am not sure the answer to that. I will have to research that and respond back. Is that can we get contact information for that and respond to that one directly?
Yeah, if you can, Amanda, if you can send us your contact information, we can work on that. Another one, this is partially answered, but there was a message from Caleb about needing help getting a microgreens operation off the ground. I think just in general, starting with your FSA service center, if you haven't already visited with them about help that might be available, programs Tom's discussing, that would be one place to start. Tom, would you have anything else to say about that?
No, that's it. That was exactly what I was going to respond. I think I would reach out to your service center directly to discuss what opportunities may be available through FSA to provide assistance in getting started on that.
Okay. Another one, can FSA loans be used for indoor vertical farming?
I don't know the answer definitively, but what I do understand, I would expect that the answer is yes. There is certainly efforts within USDA to support urban agriculture. And I know vertical farming is not necessarily urban, but I would certainly expect that funding would be available for those types of operations as well. Again, it would ultimately reside with the FSA personnel to definitively provide that.
Okay. Another one, can you define conservation as USDA defines it? Does it include stream erosion? Not sure without researching that one a little bit more. Tom, Kim?
Yeah, I think we would have to go to the USDA definitions to get an official definition of that, but my sense is that yes, stream erosion, protecting against that erosion would fall under conservation.
Yeah. And that is it at the moment.
Okay. All right. Well, then I will move on to discuss some of the management programs available through FSA. The first program I want to talk about is the Non-Insured Crop Disaster Assistance Program, referenced as NAP. These programs are designed to provide payments on crops certain eligible crops for which federal crop insurance is not available. So if you've participated in any of our prior webinars, we've talked a lot and we've covered a lot of the federal crop insurance programs that are available, and a significant number of commodities are covered under those crop insurance programs. However, there is a number of commodities that do not have federal crop insurance programs. The NAP program is designed to provide assistance for those crops when low yields, loss of inventory, or prevented planting occur due to eligible cause of loss, whether that be flood, adverse weather conditions, late frost, things of that nature. If those sorts of events occur, then this program can provide some level of payment for affected commodities. Signing up for this program, there is just a base coverage provided that will cover 50% of your expected production, and it will value that production at 55% of the average market price. So that is sort of the minimal level coverage provided. You have the option to buy up additional coverage amounts. For the production, you can buy up to 65% of your expected production, but you can elect to value it at up to 100% of the average market price. So if you want to increase your guarantee, if you will, and reduce your exposure, you certainly have the option to do that. There is a cost associated with the NAP program. If you just take the base coverage, it's $325 per crop. If you elect to buy up coverage, it is that service fee plus an additional 5.25% premium on your increased coverage. Well, next, I want to talk about two related programs. The Agricultural Risk Coverage Program, ARC, and the Price Loss Coverage, PLC. These two programs are income support programs for the 22 commodities that I have listed there on the slide. The ARC program is centered around revenue. So it provides payment when total crop revenue declines below a guarantee level. The PLC program is centered more on price. So it has less to do with actual production as it does with what happens to the price in any given year. Now, I do need to point out a couple of things about this program. It is an either or. Producers have to decide whether they want to participate in the ARC program or the PLC program. You can't do both. But these programs are also tied to base acres. Now, base acres were originally established actually back in 2008. I believe it was the 2008 Farm Bill. And the base acres are associated with a piece of land. So you can't, as a new producer, if your land does not have base acres associated with this, you can't participate in these programs. However, if your land does have base acres associated, or you're acquiring land and there are base acres associated with that land, then you are certainly eligible to participate in these programs.
Oh, and just to clarify, when you're saying these programs, you're meaning ARC and PLC.
That is correct. Yes, 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 yes. NAP does not require base acres. You can just elect to participate in that program. Thanks, Kim. So within the ARC program, there's two variants of that program. There is the ARC CO, which is based on county level revenue, and then there is the ARC IC program, which is based on an individual farm revenue. So what's the difference between those two? Well, it really has to do with which yield value is used in the calculation of revenue. Under ARC-CO, the average county level yield is used in the determination of the revenue. And then that county revenue is compared to the reference guarantee amount. And if that revenue falls below that guarantee amount, then a payment is triggered. Under the individual plan, the ARC-IC, your individual certified yield, your individual base acre yield is used in the calculation of revenue. And then if that revenue amount falls below the ARC-IC guarantee revenue for the year, then a payment is triggered in that instance. So really the main difference is in these two programs is sort of dependent on how variant your individual yield might be relative to the county yield. So that is the sort of decision point that has to be made in between those two programs. A little bit more information about the PLC program, the price loss coverage. This really centers around market price of the commodity. There is no production component relative to the PLC program. So if the risk of yield variability year over year for a particular commodity is really not too high, then the PLC program might be more attractive. In its simplest terms, the PLC program really comes down to whether this year's price is less than the reference price, the commodity reference price that's defined in the Farm Bill. If it's less, then a payment is triggered, and that payment is based on 85% of the farm's base acres. Another program that's available, and by the name you can see that it's targeted directly at dairy operations. This is the Dairy Margin Coverage Program. And what it is designed to do is allow a producer to guarantee a specific margin between the milk price received and the feed costs associated with feeding your dairy herd. Feed costs in these instances defined as a function of corn, soy meal, and alfalfa hay. They have a function to sort of weight those three futures prices to determine what feed cost is. And so if that feed cost plus the the margin that you elect to cover falls below the milk price, then and then a payment is triggered on the amount of production that you elect to cover. So you can elect a margin between $4 and $9.50 in 50-cent increments to cover. And then you can elect anywhere from 5 to 95% of your milk production history to receive a payment on should your margin not be achieved by the milk price. So again, I'll take a moment to pause there to see if there's any additional questions, or if these programs triggered anything.
Yeah, there's one from Brittany, Tom, and Brittany, you have to correct me if I'm wrong. This question popped up during the discussion of ARC, PLC, base acres, and she says, how do you find out if the land you are purchasing is in the program?
Kim, do you have any insight on that?
Yeah, as far as seeing if a farm has base acres, the first step that I would do would be to ask the person you're buying the farm from, what's your FSA base acres, and can you show me, your paperwork? And then also you can check with the FSA office and tell them that you're planning on buying an acreage and want to know if they're FSA acres on that farm. Depending upon the FSA office, they should be able to give them to you, and a lot of times if it's like an auction or something, they'll have maps, FSA maps, and it'll have the outlines and the acres and the farm number and things along that line too. So.
Thanks, Kim.
Mm-hmm.
Anything else, Brandon?
No, that's it for now.
Okay. All right. Now we'll move on to some of the recovery programs. These are typically emergency or disaster related programs that FSA has available. I'll start off with the Emergency Relief Program of 2022. This was legislation passed by Congress in 22 or 23 to deal and provide assistance for disasters that occurred in 2022. This is a $3.7 billion program to provide assistance for producers that may have experienced disasters during calendar year 2022. I do want to point out that the application deadline on this program is fast approaching. As you see there, it's August 14th. That's about a little over 2 weeks away. So if you are in a situation that might be eligible for assistance under this program, I would encourage you to follow the link I have listed there and get started on your application process. Beyond ERP, here there are some other programs to discuss. ELAP is the Emergency Assistance for Livestock, Honeybees, and Farm-Raised Fish. This is a program targeted, obviously, at those three commodities to deal with loss due to disease, adverse weather, or other conditions. Some of the losses that this program will cover, colony loss or hive loss, or actually loss of feed, damage or destruction of any purchased feed, damage or loss of grazing capability, or transportation costs associated with water for keeping your livestock hydrated, and then also fish death or loss of fish feed. You'll see in many of these programs that these are really assistance program. They do not cover 100% of your loss, but as you can see for the 3 varieties there, you can see the level of potential assistance available for bees, livestock, and fish. 75% of your colonies or your fish, or up to 60% of your feed or transportation costs. There is a similar program for tree producers, the tree assistance program. In the event of a disaster that causes damage or loss of eligible trees, bushes, and vines, can be eligible for assistance from FSA. There are some requirements that a minimum of 15% of your tree, vine, and bush must have suffered mortality above normal mortality. So you have to have had at least a minimum of 15% loss as a result of that disaster. And if your application is approved, you must replace the eligible trees, bushes, and vines within 12 months of your application acceptance. Like ELAP, you can see that there is a limit on the assistance. You can get up to 65% of your actual replant cost, or 50% of the cost to rehabilitate in the event that the tree, bush, or vine is just damaged and not destroyed. There are a couple emergency programs associated with livestock. The first I want to talk about is the Livestock Indemnity Program. This is a program that will compensate livestock owners in the event of actual death of their livestock in excess of normal mortality. So if a producer were to suffer death or even reduced revenue due to having to sell livestock at reduced prices due to injury resulting from the weather event, the producer can receive compensation through the Livestock Indemnity Program. In instances of loss, death of livestock, 75% of the fair market value of the livestock is a level of compensation under the indemnity program. Another livestock program is the Livestock Forage Disaster Program. Here, it's not necessarily assisting in the event of death or loss of the livestock. This is more related to dealing with grazing losses in the event that you're having to purchase feed or hay for your livestock because of drought or fire associated to your grazing land. In these situations, the land must be physically located in a county that has been rated as D2, D3, or D4 severity drought by the U.S. Drought Monitor. If that is the case, then you can receive up to 60% of your feed cost per month. But the number of monthly payments is up to 5 is decided by the severity and the duration of the drought in your county. So it's all sort of dependent on how long and how severe the drought is as to how many of these monthly payments you can be eligible for. The next program is for forest owners. The Emergency Forest Restoration Program is a program available for owners of non-industrial private forests. So in the event of perhaps a fire or again, perhaps hurricane along coastal regions, this program exists to provide assistance to help restore overall forest health, to whether that be replanting or clearing out some of the damaged forest. Those types of activities costs of those activities can be offset with the EFRP program. Other recovery programs to mention, there is an emergency conservation program. So should you experience a flood or a fire or other natural disaster that has caused damage to your farmland or some of your conservation facilities or equipment, it is possible to receive assistance through the emergency conservation program to help restore your either the practices or the equipment. This program can cover up to 75% of the cost to restore the land or restore the practices on your operation. And I mentioned it before in the funding section, but it's worth noting again, in the event of a disaster, emergency funding or emergency loans can be acquired through FSA to recover from a natural disaster or quarantine that affects your operation. And I will do another quick break there before moving on to the conservation programs. Brandon, any additional questions?
Yeah, there's another question that popped up regarding base acreage, and the question is, if property does not have base acreage, are we able to make them have base acreage, or is that possible?
The short, blunt answer is no. Right now you cannot do that. The base acreage was, as I said, established at the time of a prior farm bill. However, as the current farm bill is being debated, there is ongoing calls for reopening the base acre program, either to adjust the acres that are associated with existing lands or change the commodities associated with the land. So unless that program is opened up under the new farm bill, there is no way to make changes to that right now. So I don't know. As I mentioned, it's been debated with each of the prior farm bills since the base acre program has been established, and it is yet to have been reopened.
Hey, another one just popped up, asking again, what is base acreage?
Well, that is so when the and Kim, please jump in here if I misstate. So when the ARC and the PLC programs were first devised,
well, and let's go, I mean, it kind of goes back even further than that. Base acres have been in place for many, 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 many years. So starting way back in some of the older programs, they established on this acreage, my history is to plant this crop, and they put that as what they call base acre for these commodity programs. And so those were set. So for example, on this piece of acreage that we have, there are 50 acres of soybean base acres, and there might be 20 acres of wheat base acres, and whatever it takes to fill out those acres. Those acres are set. So when you can participate in certain commodity programs like ARC and PLC, instead of looking at what you planted this year to determine what your coverage is, they're looking at your base acres only, regardless of whether, for example, we haven't planted wheat on our acreage for the last 5 years, but we have wheat base acres. And when we enroll in a program, we're going to get paid on wheat base acres, not on corn, soybeans, or anything else that we grow. So those base acres stay the same until such time that Congress authorizes adjustments of those. And the only way they can do that is through the Farm Bill. By authorizing that, it changes the dollar amounts of everything. So there's a lot of discussion going on into whether or not they will authorize either adjustments or additions. For example, we've got some acreage that have no base acres in, so therefore they're not eligible. So it just depends on what they authorize in this next Farm Bill, if anything at all. Like Tom said, it may just kind of stand. So,
are the commodities able to be changed according to the base acres?
no, they are what they are until they authorize it being changed.
And the only other open question is just someone had echoed the previous question about can FSA loans be used for indoor vertical farming?
And I'll just reiterate my response. I don't know definitively, but I would expect that they would be eligible for funding. But ultimately, it would be up to visiting FSA Service Center just to verify that.
Okay, and that catches us up.
Okay, thanks, Brandon. Okay, within the conservation area, there's just a couple of programs I want to touch on. You may or may not have heard of the Conservation Reserve Program, CRP. This program has been around for quite a while, and it is designed or available to encourage producers to voluntarily put their sensitive agricultural lands into conservation activities. So if you enter into a CRP contract, the participants are required to establish resource conserving plant species to help control erosion or improve water quality or even develop wildlife habitat. In exchange for doing that, the contracted participant would receive rental payments and some cost share assistance in implementing the conservating plant species. This is a long-term arrangement. Contracts typically range from 10 to 15 years. And the amount of the rental payment or the benefit received would be based on a environmental benefit index, which is a function of habitat improvement, water quality improvement, erosion prevention, air quality, and overall cost. So if there are sensitive lands or land that has, perhaps been drained that was previously wetland, and it might be beneficial to return that to wetland, it might be possible to enter that land into a CRP contract and be able to be compensated for that. A related program of potential applicability to this audience is the CRP Transition Incentives Program. This is actually a program geared towards land that is nearing the end of a CRP contract. So it provides an opportunity for a beginning veteran or socially disadvantaged farmer to actually acquire land and put that land back into production. So what this program does is it provides additional CRP rental payments to a landowner on the condition that they sell the land to a beginning veteran or socially disadvantaged farmer. Now, that's one requirement of the program is that they sell it to that particular audience, but the new landowner also has to take that land back into production, which they certainly would probably be interested in doing in acquiring the land in the first place, but they do have to employ sustainable grazing or farming methods on that program. So this is an avenue by which assistance for land acquisition for a beginning veteran or socially disadvantaged producer might be able to acquire some land.
And Tom, before we move off CRP, I saw an answer or a question from Amanda, and I was going to answer, but it's a long answer, so it's easier to say it.
Okay.
So the question was, can you specifically purchase land to enter the CRP program? And the answer is yes and no. So to get acreage into a CRP program, basically, number one, it has to be eligible, which means it has to be highly erodible or things along the lines. So they have an index that they give them. And then also there's a specific amount of money that's available each enrollment period. So they'll have an enrollment period and there's a certain amount of money that's available, and they will, it's kind of a bidding process. And so there's only so much money available, and they try to identify which acreage would have the most impact. So you can buy land, but if it's not eligible for CRP, if it doesn't meet if there's not enough money available, or it doesn't meet the criteria for the next CRP enrollment, it's not going to be eligible. And the CRP stays with the land. So if you buy land that's in CRP, you're in CRP. It goes with it. So, and the only way to do it is to buy out, which is paying back CRP, which you don't want to do. So if you buy ground that's been in CRP for 3 years, you got 7 more years of a CRP contract. So that's why it's yes and no, depending on what you're buying and what kind of shape, because this is towards ground acreage that's sensitive, highly erodible, things along that line.
Kind of along the lines of that, another question popped up. As a disabled female veteran, how would I become involved in transition land program?
Well, I'll try to speak to that. Unfortunately, it's not, FSA does not necessarily try to facilitate the transfer of land. This program is available as a potential incentive to a current landowner. So it would be sort of incumbent on either the individual looking to sell the land or you as a veteran, if you became aware of some land that was available, if it was currently under CRP, you could potentially reach out to FSA and ask about this program and how it might be beneficial to that transaction. But unfortunately, there is no sort of single clearinghouse or of land that's available in those instances. It would sort of be dependent on you to be aware of a potential land source. Okay. I think that catches us up.
Yeah, there's a something else just popped up, but I don't really know if there's a question in this or just a statement. They say that they're looking to start a farm-based education program, cooperative, mixed-use facility involving farming. And if there is a question there, you might want to clarify, but otherwise, you may just be able to move on.
Okay. All right. So the final group of programs I want to cover today really deal with price support, and there are a couple different tools available for price support, and these really occur or are available around harvest or shearing period. The two tools are marketing assistance loans and loan deficiency payments. They are related to each other. Again, there are commodities that are specifically eligible for these programs, and I have those listed here again. So let's talk about the two tools. The first is a marketing assistance loan, and really these loans are 9-month up to 9-month financing tools that allow a producer to deal with the variability of price during harvest season. As you can imagine, simple supply and demand. At harvest time, supply of a particular commodity is going to increase, and therefore prices are going to drop. The purpose of the marketing assistance loan is to give you interim financing to cover your operational costs while you wait or hold your commodity for a more favorable price. There are two types of marketing assistance loans. The first is a non-recourse loan, and really what this loan is that you can actually pledge your commodity as collateral on the loan. So at maturity of the loan, if you still have your commodity, you haven't sold it yet, you could actually turn your commodity over as repayment on the loan. The inverse of that is recourse loan, and these loans typically deal with commodities that don't meet quality requirements, in which case they cannot be pledged as collateral on the loan. And in these instances, the loan are actually repaid at principal plus interest with cash. So you would have to actually sell your commodity and repay the loan with proceeds. So one unique nature of the marketing assistance loan is there is a price established by FSA called the loan rate. That is the initial value of the loan. But if the published market price of the commodity falls below that loan rate, you only have to repay the loan at the lower published price. So an alternative to a marketing assistance loan is a loan deficiency payment. So these are payments that are made to producers who are eligible for a marketing assistance loan, but have decided to forego the loan in return for a payment on the commodity under certain market conditions. Well, what is that market condition? It's really the situation where the actual market price this year falls below the loan rate. So if you're confident that prices are not really going to recover, if it's a really bumper yield year for that commodity, and you envision those prices staying low, then it may behoove you to forego the loan and elect for a loan deficiency payment. And then the payment would be the difference between the loan rate and the market price by times whatever quantity of commodity you produce that year. So that pretty much covers the overview of the programs available through FSA and NRCS. I've included various links here to point you to the two agency websites, as well as an outreach and education site at FSA that provides additional information on all these programs. There are even additional programs that I was not able to cover or include in the hour that we have today. So I would encourage you to visit that site and review some of the other programs available. As far as our webinar schedule, this is our 9th webinar in our current series, and you can see the previous programs that we've covered in our previous webinars. All of the recordings of these webinars are available on the Farmer Veteran Coalition YouTube channel. We do have one more webinar upcoming, currently scheduled for August 27th. Where we will be assembling a panel to discuss the various topics we covered during this series, and then also open up for general question and answer session. So I hope some of you will be able to attend that webinar. With that, I want to thank everyone for attending today and open it up for one more round of questions. Any more come in, Brandon?
Yeah, we got several. One is, well, the first, will these slides be sent out to our emails? And I think that's a question for Diego. I know it'll be on the presentation will be on the Farmer Veteran Coalition YouTube channel. Regarding the slides, I'm not sure if we've been sending those out or not.
If needed, I can. I'll put my email in the chat if you need it, and I can work with Tom and them to maybe get it out. So just I'll put my email, and then y'all can reach out to me.
All right, and there's another question about high tunnels. Let's see here.
Yeah, I saw that one. I can take it, Brandon, because
Okay.
it kind of ties into the one that I just sent about farmers.gov. Get on the farmers.gov website and go down to the bottom and sign up for their updates. They send out almost weekly, and some are more than that, like fence post updates, things along that line. And I've seen several stories about growers that used the Equip program to install high tunnels. And to do fencing projects and things along that line. So the farmers.gov is a really good website to go to. It's got a lot of information. I even saw one on there about the Office of Urban Agriculture, back to the urban agriculture. So looking at those, getting those updates, what it does is it shows a lot of those updates that you get will show you beginning farmers and how they used FSA programs. As a matter of fact, I didn't know about the transition one till I read one of those stories about a young man that lived next door to a farmer that was, getting up there in years and thinking about retirement. And that's the first time I'd ever even heard about the transition program. So those stories are really interesting. They're very encouraging, and, they also can help you get started. Part of the biggest recommendation I would have would be to find somebody who's done it, and or who's gotten into farming. Find a good mentor to help lead, help you down that path of where to look for the resources. But FSA's got a pretty good website there at farmers.gov that can help you with a lot of that information too. And another one would be your local extension office. Sometimes, the land grant universities, depending upon the extension office in your area, sometimes they have some really good programs as well. So.
Okay. Another one question is, as a veteran, can I use my years of service in lieu of 3 years of farm experience that FSA USDA requires? I don't have farm experience. However, I do want to become a farmer.
And I'm not sure what that 3 years of experience, Tom, was that a specific program, or I'm not.
Well, I guess just in general, military service doesn't take the place of the required farm service, does it?
Right. No. And I'm not sure which program that is that requires that.
Okay. And then another one regarding kind of a follow-up to the previous comment about the person looking to start a farm-based education program cooperative. It's a mixed-use facility involving farming, and their question is, can I participate in the CRP transition incentive programs if their sole focus is not farming?
Yeah, the transition project was to help growers, disadvantaged or veterans or beginning farmers, to buy land to start farming. So I don't see that being an option, Tom, but
Yeah,
that'd be a
maybe a
question
little
for FSA, I guess.
clarification. It sounds like she's going to do other things in addition to farming.
Yeah.
I mean, some form of production agricultural would be required on the land. Now, how much that would be up to FSA to determine, but it is a requirement that the land be put back into production, but do so under sustainable methods. So that doesn't mean you can't do other things, but there is at least some requirement to produce on the land that is being acquired under that program.
And I do remember a story of a grower that used equip money to get a high tunnel in, and they grew fruits or vegetables on that ground, but also used it to train. They had kids come out and teaching how to grow vegetables and things along that line. So it was kind of a combination. I don't know if that's what they're thinking, but I do remember seeing a story about that where the equip was used to get a high tunnel installed. So.
There was another one about
hang on, Brandon. She added some additional information. Small scale agricultural production to support teaching, supply chain, and small business operations for CTE programs, among other things. I don't know. It's worth it. I think it would be worth exploring with FSA if you have some land available that you're looking to acquire. I think as long as some production is going, I would think it might be possible, but there would probably be some sort of volume or scale requirement that FSA would have to answer on that.
Okay, another one, and this popped up during the discussion on marketing assistance loan and non-recourse loans, and having your commodity pledged as collateral. And the question is, who do you turn your commodity over to?
Well, yeah, I'm going to say that basically what they're saying is just like a bank, when you take out an operating note, they're putting a lien on your crop. So when you sell it to the local grain elevator or whoever you sell it to, the check, they're basically putting a lien on it. Yeah, because FSA says don't want goats, typically. So yeah.
Yeah, but I mean, in the instance where it is leveraged as collateral, and and they pay the loan off with their commodity, who is receiving that commodity, I think is the question.
Yeah, so it's wherever you typically would sell your commodity, it's just you've got a lien on it. And typically the checks would be made out to both.
All right. That's all I'm seeing.
Okay.
All
Well,
right.
thank you, everybody. We appreciate your participation and attention.
Yeah.
Diego?
Yeah, that's about all the time we got today. Got a lot of questions. I hope we answered them to the best of our abilities. If you still have any questions, please reach out to us. Put my email in the chat. You shoot me a question, I'll forward it over to them. Eric, regarding your questions about the 3 years equating from like military training experience to farm experience, I believe there's something like that. Shoot me an email and maybe I could look for something for you because I remember something like that existing. But again, this is recorded, so it'll be on our YouTube channel within the next week or so. And please be on the lookout for another invitation for our next webinar, which will be the Q&A session. But other than that, though, thank you, Tom, Kim, Brandon, and then hope everyone else has a great day.